So sorry guys, that wasn't much of the time. I said we have, like I said, these are our stance one. Understand? Because there's a change in direction as soon as the market hits particular position. Same thing applicable here, same thing applicable here, same thing applicable here. So the first law, like I said, says that once the price of the market hits a support and a demand, you understand? A supply or demand. There has to be a change in direction of the price. So now let's first find our supply and demand. Now we're talking about supply. Understand? Supply are linked to the collections of the resistance we have. Do you understand? Now, for instance, now this is the resistance, this is the resistance. Now, the collection of these two together, bringing them together, packing them together, what is now what? It's called what? It's called collection of these two, packing them together. You have to give them enough space so that they can breathe in very well. The collection of these two now is called what? Collection of these two is now called what? A supply zone. You understand? In which we now believe that when the market tends to enter this zone anytime, there will be a change in direction. You understand? In these zones. The main reason why I will actually say we should actually be using these zones more than the supply and demand. Sorry, we'll be using the supply and demand zones instead of supply and resistance is because now the market tends to be precise now. It can't be actual. You understand? So we are working on your saying you want to be actual. You keep on being disappointed. You understand? You understand? It's actually easy for me to walk around when I tell you that when you come and meet me that I want to buy bread, and I'm telling you that okay, fine, this particular bread you want to buy, this person selling it in front of our shop. We come by 7, we open by 7 o'clock. You know, me telling you that the person will by 7 o'clock. If you come in by that 7 o'clock and the person is not there, you'll be disappointed because anything can delay that woman from coming by 7 o'clock. You might have a misunderstanding with her husband or traffic or anything that will actually make her be delayed or come early by 30 minutes, 20 minutes, or 10 minutes. But when I tell you that at least from 7 to 9, the woman would have come. That 7 to 9 is actually easier to work with because she will actually be around in that 7 to 9. So now I'm not being actual, I'm being precise, and I won't be disappointed. That's why I actually urge you guys to be making of the zones now. So to be a little bit, now to be a little bit actual. That's when you can now start using all these like other blocks or stuff of a thing. You understand? So now, like I said, now the combinations of these two of this resistance now are giving us what are giving us. So now I want to use these things to judge what is actually giving us in the future and what we actually going to get in the future again. So now I said I'm actually going to use two examples. I think the way it's going now, I actually have to use one example, which is this chart and do some understand. So I'll just make sure I grant another class, but I'm not sure it's actually going to be free. Understand? But I'll make it very, very very, very affordable. Understand? So now, like I was saying, these are resistance, and the collection of resistance is what we call the supply now. Now, these are our supports, you understand? And the same thing applicable, the collection of the support is what we call demand zone. Our demand zone. Let me try and be typing all these things out so that let me prepare it. This is our demand zone. Now let's for supply zone. You understand? These are resistance one, R1, R2, S1, S2. Now, we already believe now in the market, okay, fine. Anytime the market tends to what? Tends to hit this zone next time. You understand? Or okay, for instance now, we know in the first law that says the market tends to hit that particular zone next time, there will be a change in direction. Fine. But now, how? Let me accept. So now, to make it very easy now, we have different kind of, before you can actually say a zone is verified, or you can call your zone to know that a zone is very strong. We have three types of zones. We have the I say we have the insignificant zone, or we have the insignificant resistance, you understand, or and supply, and the proven supply, the proven resistance, and I don't want to confuse guys. I want to make it in a simpler form that it will confuse you guys. Understand? That's what I actually want to do. So now, when we say a zone is proven insignificant and proven insignificant and verified, there are three. I say there are three, I personally. So now, when I say it's insignificant, that means there's actually a change in direction in price only once. Hence, I would say it's insignificant. But when there's a change in direction, like twice, we can say it's proving. It has proved itself to be a verified zone because it has actually been tested twice and there has been a change in direction twice. Understand? But when we are saying verified, then I can tell you that definitely that zone is very strong, that it has been proven three times or more than three times. And the market has actually been changing direction as soon as the price has been hitting that particular zone, either bullishly or bearishly. So now, in this particular case, now we call this kind of supply zone. This is our supply zone here. We call this particular our supply zone. We call it how will I say? We call it verified because it's just twice. You understand? If you tend to now this is if you look at me very well, this itself the support. Are you listening? This is support, and these are supports. So now let me drag this zone up so that I can take these zones too. You understand? So now these are my zones because I have collections of what of supports. Zones, so they are my what? They are my demand zones. Are you getting me? So yeah. So now, according to what I said, we already believe that once the market touches particular zones, we tend to believe that there should be a change in direction of price. Now, after this one, two, the collections. Now, can you see that for everything that is making the market to fall back inside these zones, they are always changing direction. Can you see? Can you see they're changing direction, even though they are not yet falling inside here. So that's that about the first law. So now the second law will lead us to what we said in the first law. Now, let me try and use the brush to explain this and go to a very free place to work. Now, I said in the first place that the first law, what the first law is trying to tell us is that these are our supplies, these are our demands. As long as the market already proved, has already proven, or we already have a verified support and demand, that anytime the market hits any of these zones, it has to be bouncing like that, be bouncing, that's be bouncing, that's be bouncing like this. You understand that there has to be a change direction as long as the market tends to be hitting these zones. But now, for every law, there must be an exception. Hence, if the market does not obey this law, because if the market is actually going in this kind of manner, you understand, there will not be something like a profit because there's no way some people will be losing money that some people will earn money. You understand? Because the market is programmed to move in an irrational pattern. Well, it is going like this, the market is already rational. Since it can be easily predicted, it's already easily predictable, in which we don't want. So now, the second law now says if this first law doesn't apply, that is, the market tends to what? The market tends to like break these particular zones after some times. Are you listening? Then when the market breaks these zones, understand? As they are able to break these zones, it means that there are two things here. It means that the market wants to go long in that particular method it's used to break that zone. If the market should break this zone bluishly, then the market wants to continue like within that particular period of time, the market wants to continue a bullish movement up. That is, market wants to go down for some time. And if it's bearishly, it means the market wants to go down for some time. You understand? But the dollar says that before the market can actually attain the particular position it wants to reach, for that going bluishly or bearishly, the market will now look for a very close. That's if the market should break this now. The market should break this bearishly, for an example. The market should break this bearishly, for an example. The market should break this bearishly, for an example. You understand? Before it's continuing that movement, it was coming like this. So it was coming like this. Like this. Before the market can continue, before the market can continue in this move, you understand? It has to look for a very near support or a very near demand zone that will push it up to retest the zone it broke, which is BOS, break of structure, market structure. I don't know, but like I said, this class is more or less like an advanced intermediate class. You understand? So when I'm talking about market structures are more or less like the demand zones, trend lines, you understand, supply and resistance, support and resistance, and stuff like that. So once there's a break in any of the structures, POS structures. Hello?
Spaces here, then you send it through Google Drive to me, which you are going to be sending to the WebEx platform after the live session. So that's how to submit.
If your question and suggestion can be, you can chat it up so that I can hear better. You understand? I think I understand what you're trying to say. So that's like without wasting of our time, let me just continue. So now we tend to say they are fine. Then after that, markets will have to look for a very close zone. It is breaking bearishly. It has to look for a very close zone that we use to push it up as a retest for its continue that movement. And these are when for you to know that the market is actually going to come to that particular zone, that maybe that zone will be respected for a mitigation or a retest. That's when you now check maybe there's an other block around that zone, like market to come and mitigate. You understand? So for instance, this particular zone now, you can call this last bluish, the other block. Right now, notice that when the market was coming up, you understand, it came directly to that zone, to that candlestick or that bluish before it started coming back. Understand? Same thing applicable to here. Let's call this one another block too. Market later came back here to mitigate it. These are where we're actually going to be doing our entries with times. Understand? Our entries, our stop loss. Because definitely the market is not going to obey the zone, it's not going to obey the other block. Then the stop loss should be below the other block here. You understand? So that's that about that. So now, for instance, what I'm trying to say. And if it's the same thing, if the market should tend to break it bearishly, then it has to look for another zone that will make it to come back here to mitigate or test the zone it broke before going. That's the second law. Now, the first law says that, let me go again. The price of a market has to obey zones. Understand? That there has to be a change in direction of price as long as the market tends to hit those zones. Hence, if this is not obeyed, that's when law 2 comes in. Then if there's a break in any of the structures, either bearishly or bullishly, it means that the market wants to move in that direction for a very long time. So fine. Before it moves for that, before it moves for a long time, it has to look for a particular position, for a particular zone that will make the market to test the zone it broke before going that long direction it wants to move. You understand what I'm trying to say? So now, thinking logically, if you want to enter as a trader, let me just say we have kind of entries. We have both the conservative traders and the aggressive traders. And what I mean by the conservative traders are those that will actually enter the position immediately, buy here, because they already know that since the market actually continue that particular period of in that particular direction for a particular period of time, let them enter now once there's a break. You understand? I will tell you why and why the advantage of the two. If I aggressive trader, when you enter here and market tends to buy at that particular period of time, if the market does not come to the test, because conservative traders you tend to believe that the market is actually going to come back to that zone before it goes before it tends to uh, before it tends to go that direction that it wants to go. You understand? But wait, before I continue this kind of tactic, I want to teach you guys. Eh? Let me talk about the third law. The third law is not talking about the first breakout. You understand? So the third law is where this white man got his own experience. That's not telling us that white club schematics. And that's what's actually happening so now. Let's go back here. Now let me draw my zones. Let me draw it very now. As you can see what happened here now. I said there's a break in the structure. But instead of the market mitigating it after this retest, you understand? See this other block here now. It left another block here. Then this other block here. It left other block here. For us to know that it has to mitigate this other block. After that the zone is divided, after mitigating the other block, continue with that movement. So now, someone like you now, if you should enter here, you can't be profitable in trading all the time. So you have to be, when you know the laws, you be profitable. Now, normal you, after mitigating the other block and after seeing your reversal candlestick, the least thing you look at when it comes to your reversal candlestick, that's the last thing you look at. When people test this that because they see a reversal candlestick here, that it will actually there will be a change direction. No. The least thing you look at are candlesticks. And when you're looking at candlesticks, you make sure that candlestick you are seeing, when you say reversal candlestick, you make sure that okay, definitely this reversal candlestick is actually forming at these zones. So now we already have two things we are considering at the zone. To know maybe the zone will be valid, or the zone will break, or the zone will serve as a change in direction, which is the other block in the zone and candlestick, reversal candlesticks. Okay, how do I know if a zone is actually going to be respected or is not going to be respected? You understand? We have the continuation candlesticks and we have reversal candlesticks. And one very good example of reversal candlesticks are Doji, Ama, Morningstar, Evening Star. Why the basic and the only that we recommend continuation candlesticks are the three white soldiers. That is, the market will break that structure strongly without showing any indecisions around that zone. All time about indecisions are something like this, which are the reversal candlesticks. You see, these are a combination of Doji candlestick, AMA, inverted outcome. Yeah, these are indecisions in the market. That is, the closing price and the opening price of the candlesticks are closer to each other. You understand? We tend to understand it better in this thing when you opt in for the, I don't know, maybe for the class, because if I actually go to the class, I'll actually start with beginners this thing, but we'll just make it fast. It will be a more or less like 4-day class. The first day will be for beginners, second day will be for intermediates, and third day will be for advanced. Understand? So I'll start and think about the price. You understand? I will actually favor everybody. I'll favor, and you guys will be favored, and it's actually avoided. So now, like I was saying, now can you see after coming to mitigate the other plot as low, if you enter a sell at this particular of time, you still profitable. You understand? But if you find them in such a way that you already make this place your first tipping, but fine, glory be to God with the first tipping, but you have actually locked your profits. You understand? I want to talk about lock profits like you've already put your SL. Yeah, I will not lie to you and be like all those people that will actually look for a particular thing in the chart that will favor them to come to explanation. I'm seeing particulars that will favor me, but I'm going for the ones that will not favor me. My explanation so that you can understand what I'm trying to say very well. Now, you taking a TP, this should be your first TP and this should be your second TP. But now, consider the first TP at all. But fine, let us say with time, okay, that fine you want to be very, 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 very okay. This should be your first TP actually. Only first TP. Mark Barrow. Because if you consider your how will I say it, you switch to a lower time frame. I consider your chart pattern very well. This is a triangular chart pattern in which there was a break. You understand? Can you see? Now we can say it came to the state before going up. But with the idea of the laws we are having, uh-uh, you understand? You let me counter myself. I'm still even right. Let me counter myself. Well, in short, what I'm just trying to say is that can we see that instead of it mitigating this zone and coming down, very richly it went in back. Now that's the third law. That's why we call this a force breakout, FBO, force breakout. Now the market now tell us that if the first law, the market does not obey the first law, and there's a break in the zones, which is the second law. I know what I'm trying to say. That tends to say that it should mitigate the zone before going that particular direction. And it does not mitigate it. It fell in back into the price range. I'm talking about the price range. I'm talking about the range of the price range of demand and supply zone. That is the irregular movement. You understand? The ranging market. Now it fell in back. Now the market is not telling us that. See, if this kind of thing should happen, then what it's telling you is that now listen attentively now. I'm a little bit like it might actually be hard for you to understand because I'm trying to like explain an advanced way, but I'm trying to get it like that. I want to make it a simpler way. That's why I'm like this. But if I'm actually trying to make it fine, I want to go for a beginner. Understand? I will know how to use the beginner language to explain. But like I said, it's an advanced class, advanced language class. But now, what's trying to say that it's trying to say now is that this kind of thing should happen. You understand what I'm trying to say? Now, let me use these things to explain again. This kind of thing should happen. That is the market instead of mitigating and coming like this. You understand? Instead of coming like that, it now came like this. It fell in back into this price range. Then the market will come back, come to our supply zone here. After coming to our supply zone here, it come back and make a retest to this demand zone. After making a retest to this demand zone, it will break it bluishly. That is, it will break this supply zone. I don't want to know what you want to say. It will break it. I'm proving it to you. It's going to break it. Now we have 24 hours explanation of what's actually going to happen in the market. Now, me knowing what's actually going to happen in this market now. Now, let me switch to lower time frames to make the market. Fine. So now I've already told you the third law. The third law says that if the market should break the structure, and instead of making a retest, you understand, if you make a retest here, it's falling back, then this will be the movement. That's to come here. Supply zone. To show that it's still valid. Then make a retest with the demand zone to respect is that sorry for breaking you if you are still valid before it now break the supply zone, which is coming up here. Break the second retest before breaking it. Understand? And after breaking it again, no, don't forget our first law. We still broke a zone. It will still have to go and look for. You still have to go and look for another very near zone. Maybe this one. You can call this one 2 zone. That it will when it hits, it make it to test this zone that it broke, this lowest that occurred here. Understand? Now let me try. What actually happened there is more or less like first breakout. For ICT people will make you know and call it another name for you. This is a first breakout say that happened there. Actually run out of time. This is the first breakout that happened there. You understand? But they will call it turtle soup. Some will call it spin. You understand? So now the law says if you don't understand the third law, after a first breakout, the market tends to come here, then break. You understand? And break it. Then finally, let's go to like I was not saying, after that, if the market should not break this supply zone too, that's to be the first law. That's good for another year zone that will make it to come back. You understand? Make a retest before it goes up. You understand? So now let's go to a lower time frame to see how we will make the market. Now let's switch to 24 hours. Don't forget what you have in your mind in the 24 hours. What we are looking for is selling opportunity. And we are looking for buying opportunity that you want to scalp buy. Know what you are doing. So now let us go to our 4 hours. No load. Let me go to 2 hours. 8 hours. I don't know if you guys are understanding. Let me go to that. The voice is very low. Need the recording. Oof, okay. I'm actually recording. We have just less than 8 minutes left. I like to use it very well. Why is this not loading? Why is this thing not loading? I want to refresh it, but refresh it. It's 1 hour. 1 hour, yeah. Let's do that 4 hours. It's 4 hours like that. My people, I beg. I just use it for 1 hour like that. I want you to start from 12 hours to 8 hours, 4 hours, 1 hour. Then you pick your entries from 15 minutes, 30 minutes. But that's what we have now. So market is not showing us. But don't forget actually we're looking for sell this market. But at the same time, any opportunity to get new. I saw something. Now, if you still remember your chart pattern very well, this is a triangular chart pattern. And now, if you notice what I said, in that third law I said now is applicable to all these chart patterns, and that's why they call their chart patterns. Because now, see, you will see, this is a triangular. Let's open it. This is a triangular chart pattern. Market was trading in this. There was the first breakout here. Can you see? The first breakout here. The market falling back. It came to respect these zones because these things are initially they are like more or less like zones too. You understand? Like I'm talking about the edges, the trend line, or something. It came back to make a retest. That sorry, oh, say I no respect you. And indirectly itself, you see that it's not coincidentally. This is a oh God, this things. I wish we can actually have enough time for these things. This is actually simpler. If you calm down, if you go to a lower time frame, see that this thing itself, this one itself, the supply zone, so it's a demand zone, and there was a break in it, and it came to retest it. If you now zoom in, you will see that it's left another block there too, this green, and that's what this market came to mitigate there. You understand? Before it's obeying the law in its other block, obeying the law. In short, what I'm just trying to tell you guys now is that it's broke this chart pattern. Now I'm expecting this market to buy this particular extent. Yeah, to buy that because that's to test this for every breakout, that's to retest anything to go. Either chart pattern, zones, anything. So it actually comes to this particular zone. But fine, let me how do I know where it's actually going to come in? Then we can actually do a Fibonacci retracement using the three golden the three golden ratios number, or you cite your other block very close to something. So we have other blocks here now. So now let's use those three things now. We have other block here. This is another block here. This is another one here. You can still work around this thing. Anywhere I enter here, anywhere I enter for myself here, I feel profitable. Just little noise that can. But to be sure, let's try and use our Fibonacci retracement using the three ratio number. Let's see the one that aligns with the three ratio number using our high and our low. Now we are using the 38.1. Definitely we can't be this one. This can be. But let's go for the upper one. This is our 50. So the first one is coincidentally between the 50. So if we want to use our 60, 60 will more or less fall inside that. Want to fall inside that this thing very well. You understand? Don't let us use 60. Let us use 0.5, which is this one. But I think with that, the list can actually go for. So now let's use this one as our entry. So now live signals, please remind me, but I might not be able to, might not remember this signal. A sell limit in 202223. I'm putting it to you guys now. Give my platform. If the market should reach this particular position and it doesn't come down to this particular zone we are saying before it breaks it, before it comes up. So this is the market now. The market is coming a bullish way. Here to this particular position, and come here. You understand? So now that's that about that. Can you see how simple it is? Now, well, how will I know my entry? I already know that okay, fine. What I should be going for is a sell because market has to sell. But at the same time, I cannot wait till the market comes to this particular period of time before I now trade now. Now, I want to eat, buy. At the same time, you have to consider yourself, not what, not buying or selling at premium price. And what I'm saying about premium price is like, now the market is buying, and you just now enter buy and join to buy. No, it's always safer for you to enter a started price. That is when the market has sold. If you want to buy and the market is selling, it's always an opportunity for you to place your buy. So, for instance, now I will urge us to wait. Now, when we are featuring for our, who is this? We are going for our, we are going for our, we are less than 2 minutes now. So I'll just make this name fast. So we are going for our, like when we want to go for a premium, a discounted price, and we are going for our entry, looking for our entry. So we tend to change to like 30 minutes, 15 minutes, 10 minutes. So now let's change to 30 minutes. I pray the reef implementation of people will be fine. Now, let me zoom in very well so you guys can see. Oh, it has actually happened, sir. It has happened. What I'm trying to say is that I thought the market was still buying, but it will still make a good example for us. That's what I'm explaining so that you understand. So now, if you notice now that this particular place, you understand, something as resistance, right? Something as resistance. So I'm believing, okay, it does not actually reach that particular position. I'm believing that when the price of the market hits this particular position here, understand, it will actually have to come. Because you know these are zones. This 1, 2, 3 are zones that the market broke here. Let us say this other block is left. Understand? So we are still believing that the market after coming here, understand, will still come to this place to mitigate it before going up. So now our position, our entry price would be what? Is 2024.5497 for the buy signal. I'll make sure I drop the signal after the class. Less than a minute more. Understand? So that's that about that, guys. So let us see that. To believe that the market will come here. And now, guess what, guys? This is more or less looking like the third blow. Understand? Because the market was coming here, but the breakout here came in back to the price grading. Then that's to make second big test before breaking. But indirectly, you know, it's still like the laws are working together already. That's what I'm trying to say. So now, if you come here, we enter a buy here. Use this place as our first TP because this is a resistance too. And when the market hits this place too, after coming like this, the market should come like this. Come here. They now break it like this. You know that the market